we've discussed at length about the mountain of issues that Malaysia and the world face, and simultaneously the importance of an all-of-nation approach. In the spirit of increasing the synergy of efforts across GLICs, the Ministry of Finance has spearheaded the Gear Up program, which seeks to catalyze growth in key economic sectors. So, with that said, we are very excited to have them here today to share how they are raising the ceiling and raising the floor. Please welcome Dato Abdul Rahman Ahmad, President and Group CEO, Pemodalan Nasional Berhad, PNB, Ahmad Zulqarnain On, CEO of the Employees Provident Fund, or EPF, Dato Amirul Feisal Wan Zahir, Managing Director of Khazanah Nasional Berhad, or KNB, and Dato Hajah Nik Amlizan Mohamed, CEO of Kumpulan Wang Persaraan, or Khaw. And to moderate this special session, we have Nick Khaw, Head of Research and Co-Head of Private Markets, Khazanah. Nick, take it away.
Hi, everybody. So, first of all, I just want to say thank you to everybody for being here. I want to, because we organized it, so I'll take 30 seconds. That's why I asked to cut the previous session short earlier. I just want to thank Atia, Racy, and Rowan for writing the concept paper, which I think all of you should read. Please give them a round of applause. Look, the unfortunate thing that we had a question earlier about who's going to pay for industrial policy. Ethan, I'm sorry to tell you that your company, as one of these four, will have to pay for it. And the other part I did want to say, we had Prof. Stiglitz talking about the nature of justice and what kind of economic systems we have, where there's a section on industrial policy and the thinking behind it. Now let's meet the people who actually have to execute it and who have to pay for it. So we have all these people on stage. We have about 1.8 trillion ringgit of capital on stage. 1.3 trillion is one end and the rest fill out. And we're going to go through this program called Gear Up, which is an initiative by the Ministry of Finance to see how we can do more domestic direct investments in Malaysia. So Nelson, you mentioned about the role of government in trying to do more of these investments. So one thing for Malaysia, institutional investors are part of this. And we'll go through this. And we'll start going down this way because I've allocated them by AUM, so from the biggest to the smallest. And Dato Feisal has to see Sultan out, but when he comes back, we'll replace. But so Hisham is the stand-in for now. But when we go down this way, it will go from harder question to easier question because I remember who pays my salary. So we'll start with Zul. Zul, thank you for being here. So Zul, I'm going to start. The first question is the same for everybody. So as we approach Gear Up and we're thinking about domestic investments in Malaysia, maybe you can share first, given the mandate of EPF and the investment strategy and objectives of EPF, how will EPF approach domestic investments in Malaysia? And by the way, thank you for managing my money.
Good morning, Nick. Assalamualaikum, everyone. Thank you for having me here. And sorry, I have a little bit of a sore throat today, so I will try my best. I think the first thing to note is EPF is a very large investor in Malaysia. So when you look at our asset allocation, 62% is in Malaysia today and 38% international. And we continue to be large investors in the sense that we hold today 1/4 of all government securities, about 1/5 of all private debt securities, and roughly about 9-10% of the domestic equity market. So it's a sizable position that we already have in Malaysia. When you do look at our portfolio, however, you will see that, and I've deliberately mentioned these asset classes because they are public asset classes, public securities. When you look at private investments in Malaysia, our share is significantly lower. So one of the things that EPF has done very well over the past 2 decades, and I've been very lucky because there have been successive leaders in EPF that have done this very well, is doing private investments internationally, in private equity, in real estate, and in infrastructure. And that is a sizable proportion of our portfolio today, and it has been a very successful investment program over the past almost 2 decades now. I think taking the learnings of private investing internationally, and we're looking at bringing that back into Malaysia over the next 5 years. And what we've done is we've reallocated 1% of domestic investments from fixed income into private investments. And that 1%, half of that roughly will go into infrastructure and half of that will go into private equity. So 1% reallocation for EPF is quite sizable, and that's how we're approaching it. How we will do this is again consistent with what has been successful for us over the past 2 decades, which is we will work with high quality managers to deploy the capital. We will co-invest with them. In some instances, for larger deals, we will co-underwrite with them. And we'll stick to our knitting in terms of how we think it's best to deploy capital domestically.
Thanks, Zul. Next, same question to Dato Rahman.
Thanks. Thank you. Firstly, just like to thank for the invitation to be on this panel. Very happy to be here. So I'd just like to echo what Zul has said. First, in terms of context, GLICs are probably the biggest investors in Malaysia. So EPF, Zul was mentioning it. On the PNB perspective, roughly we have about 330 billion fund size. 80% of it is invested domestically. So that's roughly 240 billion ringgit. So we are already, one of the largest investors in the Malaysian market. And in terms of our commitment, I think under Gear Up, I think it's been announced roughly about 30 billion of new gross investment over the next 5 years. So the way how is very, very similar to what I think Zul has basically mentioned, but I look at it effectively in three approaches or 3 lenses. The first one is through our strategic investing companies. So I think that's really important. PNB being, and that's where I guess slightly different. We actually have very, very large strategic companies that invest substantially in Malaysia. So whether it's Guthrie through their logistics play and industrial parks development play and automation play, whether it's Sime Property and Setia in terms of the development of I call it new green type industrial estate. Whether it's Sime Darby in terms of the investment in the automotive sector. So a big part effectively of the new gross investment will come through our strategic companies. Second, through our own direct investment, and that can be done later. We'll talk about teams across the teams that we actually have. And then third, I think part of the government approach is also to consolidate what we call overlapping agencies. So I think we've been mandated to actually drive the what we call the consolidation of Equinas in terms of Yayasan Equity Nasional and Yayasan Pelaburan Bumi Putra. Unfortunately, another of my baby that I need to actually to look at it again. So I think Equinas alone actually have roughly around 5 billion of funds, which is focused on private equity investment. So we'll utilize and the idea is actually to use that to spearhead our direct equity, domestic direct equity investment.
Thanks, Dato Hajah Nick Amlizan.
Thank you, Nick. Thank you, Khazanah, for having us here today. Co-op is more than 180 billion ringgit sovereign wealth pension fund. More than 75% is invested domestically and more than 80% in the public market space. So we are very conscious of the fact that public market will remain our priority. But at the same time, if we really want to raise the ceiling, we have to look at the private market side. In Malaysia, for example, our SMEs, about 1.15 million SMEs, with 97% of the businesses are in their SMEs, and they contribute about 38% of Malaysian GDP. So we cannot avoid but make real changes, and they reflect the real mirror of the real economy, so to speak. So the way that we've done is through, many of them actually through collaborations. So for us, it's quite crucial for us to look at them via, for example, partnerships with the fund managers who have expertise in the private market. Our role is basically to provide funding, to provide, if need be, resources, professional resources, if need be, for example, the network. And over and above that, what we do is, for example, one of the investments that we've done, actually currently they are a retail beverage company. They have more than almost 600 outlets in Malaysia and more than 50 outside Malaysia. And the intention is to use our investments to go abroad, to venture more into the ASEAN as well as the Middle East market. And the other one, for example, that is the one amongst the latest investments that we've done. The other one is the earlier investments that we've done, which is in the telco infra company. When we first invested, they were, I think, 11th largest in the world. Now they are number 6 largest in the world. And for us, when we look at them, what we intend to do is to take all these seemingly, perhaps we call them jago kampung, you know, they are good domestically, and to allow them to venture abroad, to help them grow. So in the future, lack of funding should not be an excuse not to grow.
Thank you. So Dr. Feisal earlier had to accompany the Sultan out. So let me going to repeat the question. As I told everybody, I'm going to start from hardest to easiest. So the question for you is, how are you today?
I'm fine. Okay, next question.
No, but okay. But the question is, when it comes to the domestic investments, because we just had a session on industrial policy and talking about investing in Malaysia, how does it fit, given the different mandates and objectives for each click? And for Khazanah, Dato, maybe you can share about how it fits within Khazanah's mandate.
Okay. Well, I think I mentioned at the opening address that Khazanah is all about advancing Malaysia, you know, building sustainable value for Malaysia and Malaysians. And in terms of how we're doing it, actually this forum tells you what we're doing. It's basically we're finding potatoes. And I say that, actually it's true, because we are finding potatoes, because, you know, when we actually look at the country, for example, right? Look at the country and look at the companies that are listed. We have large listed companies, but you might say that, you know, it's come to a stage where they could be more productive, they could be more innovative. And as far as an economy is concerned, I think we've been talking about yesterday how we're looking at ecosystems to build venture capital or innovation, right? In other words, what we are seeing here is that, you know, how can we build more productivity and more innovation in the country? Which is, like I said, like the potato, you know, more productive, more resilient, more adaptable. And also, of course, from the probable to the possible, which is more innovative. How can we do that? So we are in pursuit of potatoes. Now, in doing that, I think this is where we look at the domestic investment. So we are focused on a couple of things, and this is where we do coordinate with ourselves amongst the government-linked investment companies. And one of the areas here is because when you want to be more productive and innovative, I guess we have to look at firms. So transforming firms is one area that we are focused in. And transforming firms, you have the full life cycle of firms from the early companies, the smaller companies, all the way to the large companies. So we're looking at the VC ecosystem, right? Venture capital startups. And here we have MAVCAP and Panjana Capital being merged, and we're looking at it, how they can actually play a role. And like I said at the beginning, we're not here to crowd out. We're not here to replace them, but we'll see how we can actually catalyze other people to come in as well. So that's one area. The mid-sized companies and mid-tier companies is another one where we are having a program. And again, we're working very well with KWAP here, where each of us have a role. And again, it's to catalyze and crowd in people. How do we get the entrepreneurs that are doing very well to get to that global I guess level? I think Dr. Nelson, I think you mentioned in Brazil, you need your talent, you need to put them to focus on being globally competitive, and that's something that we are focused on as well. And then of course the other part, semiconductors, we've heard a lot about it yesterday, and at the same time we're also looked looking at the listed companies, the larger listed companies, and I see Tan Sri Wahid here, Chairman of Bursa. Okay, we're looking at the listed companies, working with Bursa as well to see how can we be more active to really get the companies to be more direct and value create. And I think most of you here are our guests, and we invited you because you are CEOs and chairmen. So we'll be asking you questions at the board if you are our investee companies. What are you doing in terms of gaining that productivity and gaining that innovation? So I guess when you look at where we are as far as Khazanah, as our mandate is concerned, we are investing. We're focused on Malaysia. We are home biased, and we're also building enablers. Energy transition is one thing that we are doing in order to enable it for everyone, as well as making sure that us as a country stays connected. And this is through our investments in the airlines and airports. So yeah, that's our mandate. Yeah.
Thank you. So, okay, that's the first set of questions about actually how the mandate fits. Because certainly, for some things which may be a bit too risky, probably don't really want my retirement savings to be too invested in some of these things. So I think it's important, to understand that as we do domestic investments, it is important that we understand for each type of GLIC what they can do and what their constraints are, so that we keep to the objective and the mandate with which they're entrusted to. But then that leads to the second question, which is, okay, so we're going to do this, and we certainly don't want to be all chasing the same thing and doing everything where we cross, so many cross lines, and where we do invest in or chase the same target together, because that just drives the valuation up. So in terms of how the coordination is in thinking about the themes in which we'll try to address, how does it look like for EPF? So.
I think you would have read in the media and some of the press releases that there is some coordination in terms of how the GLICs are championing certain sectors. And for the EPF, and there's two parts to this Gear Up program. There is the so-called raise the ceiling part in terms of how do we raise the bar for corporations and industries in Malaysia. And the second part is about raising the floor. How do we improve societal outcomes? On the raise the ceiling part, EPF, and we've put a lot of thought into this in terms of what is the industry that is closest to our heart. And as a pension fund, as a retirement fund, the health outcomes of Malaysians is something that is incredibly important to us. Because a productive society a healthier society is a more productive society. And access to healthcare for the elderly in particular improves their outcomes as well. So to put it in simple mathematical terms, the money that you save over your lifetime in EPF will go a lot further if you are healthy. It's just as simple as that, right? Now, when we look at the demographics of the country as well, it is very favorable to the healthcare business in Malaysia. So we have a rapidly aging society. Not to be morbid about it, but 25 years from now, you're going to have double the people who are dying than there are today. And the demand for healthcare, there is a natural tailwind to demand for healthcare services over the next couple of decades. It is also interesting that private healthcare in Malaysia is an incredibly profitable industry. And when you look at the return on capital employed for many healthcare businesses in Malaysia, it is well above the cost of capital. And it is a business that creates quite a lot of value. There are gaps, of course, that I think private capital can address. There are gaps in terms of insurance coverage that the EPF can help with, we think. So from when we look at it holistically, healthcare in general and better health outcomes for Malaysians is something that is close to our heart. So we are looking both from the raise the ceiling and the raise the floor standpoints, how we can play a positive role in the economy.
Thanks, Zul. Dato Ahmad?
Yeah, I think on our side, I think the themes that we are looking at after analyzing our current portfolio that we have, I don't think it will be very much different than what other GLIC looking for. I think three main themes we are looking at is E&E, which historically at PNB has been underinvest in this area, energy transition, as well as healthcare, what Zul mentioned. But I think to overlap or to avoid that overlap point, Nick, that you raised, I think this is where I think part of the gear up, I think we need to look at it that we're not competing to each other. I think really it makes real sense for all of us to do a lot more co-investment than what we've done or that we have done in the past, because obviously I think our interest is aligned, right? We want to invest in things that generates return. And I think this is where I think we should be flexible, and I think the whole idea of Gear Up is to see how we can work together, co-invest together. I think there have been already transaction that's been happening. I think the Malaysia Airports deal between Khazanah and EPF and other basically deals that that can look at whereby all of us can actually co-invest together. There are certain areas whereby I think one of us will take the lead and others will just invest, and then there are some other areas that another GLIC will take the lead, and I think PNB more than happy to actually to support. So I think that's how we can avoid what I call duplication and pushing up effectively prices and help to promote what I call sustainable returns.
Thank you. Dato' Nick?
You know, the size of the Malaysian capital market, public capital market is what, 3.8 trillion, 1.8 equity, 2 trillion in the bond and sukuk space. And if you look at the private market side, the size is 17.6 billion ringgit, which is 0.4% of the public market. And if you compare that with the US, $111 trillion of the public capital market, and the private capital is what, 7.5 trillion, which is 6.7%. So I think from 0.4% to get to 7.6%, there's still a lot of room to grow. So for us, there is a lot of space, still ample space for any of us, you know, to basically invest in and to look at the same deal, to help to grow these companies within the same sectors. So it's not going to be crowding out anyone because there's still ample of room. There's still many potatoes that have not been dug out of the land, you know. So I think there are many opportunities there. Over and above that, I think for the private market side, where we are actually looking how to close the gaps in the ecosystem. I think that Professor mentioned earlier, from the VC space, from the PE space. So one example that we've done is to bring in secondary fund managers, because that is what's lacking right now in the ecosystem, whereby to address the liquidity gap onshore, whereby investors who want to invest in the private market side, most times, you know, if they go and invest in the funds, through the funds, they have to wait for 10 to 12 years before they can actually liquidate or get their capital back. Whereas the secondary will allow them to exit much earlier, to allow that capital to be reused, that will meet each and individual requirements, investment requirements at our board and investment panel. So I think for us to look at the same deals is actually really good. So for us to ensure that the due diligence are well addressed by different parties to meet the different needs by each organization. And I think over and above that, when we look at the investments, it's not that, I think to quote Dr. Miao said yesterday, right? Not to focus on competition, instead to focus on collaboration and cooperation. So for us, we talked quite often at the working level among the team members in terms of the deals that we're looking at, whether or not those deals would meet each and our requirements and to fit into the size of our investments, the size of our risk. So I think there is a lot of ample room there for us to work together.
Yeah, thanks. I think I just want to follow on what Dato' Nick mentioned about cooperation, and also something that we call the relay race amongst us. And And I think the relay race is where we're supporting the whole ecosystem from, I guess, from startup, early stage until more mature. And each of us has a different risk appetite. You know, for example, for us, we can take on more higher risk, given who we are and our stakeholders, but it might not be the same for perhaps some of the larger funds who have to continually provide their income for their stakeholders. In which case, this is where each of us have a role to play. That's why I think us and KWP are more involved in the early stage companies and in that part of the ecosystem and building it and crowding in other investors. But of course that, if they are successful, I think that's what Nick mentioned about the secondary market. And of course there's also the public markets as well, which can be taken on by some of the larger funds. So that is a relay race in terms of a life cycle of a firm. But at the same time, when we actually look at the areas as an industry or pillars, and this is where each of us will have a different set of stakeholders and therefore a set of different initiatives. I think for us, it is about advancing the nation, and therefore we look at the enablers and we look at areas that we can actually catalyze. But even between us, you know, there are certain segments that we do take in terms of industry. So that's how we manage the risk, and that's how we play our own role.
Thank you. So at this time, so those of you who follow KMF know that I normally like to mix it up with audience participation in between. I do have one more question. So I'm going to take questions, and people know I'm not afraid to cold call. And people know that I always cold call Hisham, but I feel bad for Hisham having to come up and down. So I'm going to actually ask someone to ask a question, because he's been very patient to sit with us the whole time. So maybe YB Liu Chin Tong, since we are one of the, since we are the agencies who have to help with MITI in trying to do your new industrial master plan and your national semiconductor strategy, maybe if you have questions for us as we try to do this, can we get a mic to the Deputy Minister, please?
Thank you, Nick, for putting me to do this. I think my question is, how do we coordinate between, for example, the GLICs and MIDA? And how do we actually work very well? Frankly, I think there's a need for us to work together. It wasn't there. And how do we achieve the social purposes of creating jobs and better jobs?
Okay, why don't we take question 5 and then we address together. Sorry, not question 5, number 5, and then we address together.
Hi, Darawati here. First of all, thank you very much for the sharing for all the large institutions, and it's very encouraging to hear how much support the private market deal environment can expect. I'd be interested to hear your opinion in terms of where do you see the corporates and maybe a little bit on sort of like the family offices. How do you expect them to also participate in the private markets, whether it's directly through the stable of corporates underneath each of your organizations, or and how can you actually influence other parts of society, corporate society of Malaysia, to also participate in catalyzing growth for Malaysia? Thank you.
Thank you. So 2 questions. The first one on actually the role of job creation as we think about these different themes that we're trying to do in the investments we're trying to make. The second is, how can we get corporates, family offices, and even civil society organizations more involved? So you don't have to answer both. I mean, just answer which one you feel that you have more to say about. So anybody who can go first.
Sorry, I'm supposed to get the easiest one, right?
Yes. After this, I will add more.
Okay. YB, to YB's question, I think in terms of coordinating, you're absolutely right. I think each of our institutions see different things. And I think MIDA, for example, sees a lot of things, and whether it's overseas as well as domestically. So we are actually talking very closely with MIDA nowadays, and our office is actually not very far, so that helps. But I think it's also helpful because we also invest overseas. And when we invest overseas, we also understand what people are looking for when they actually look at looking at the supply chains, right? Trying to look at where to invest. In fact, a lot of, I guess, our guests here are also part of our partners that are actually looking at the country. And I think a better understanding of what people are looking for in a country and a better understanding of what the government wants. You kind of like see the, what's that diagram, Venn diagram, where you can see the overlap and see where it can actually help. So that's something that we can actually work well, and we are working with your team. Now, as far as jobs is concerned, actually that's a very interesting topic. Why I say it's very interesting is because, we have been receiving investments over the decades. We've been receiving that. And I think when you look at our economy, it's been very, very strong. But one thing that if we look back, have we actually capitalized on these investments enough? Professor, we were just talking about the Professor Stiglitz, how companies, large companies would love to invest in your country, provided that you give all these incentives. So I guess the onus on us is how do we actually extract that? And it comes back to jobs. But we don't want jobs which are just, lower paying jobs. We want to be able to extract more. And I think where we're looking at is not just looking at jobs, but looking at the ecosystem. How can we build an ecosystem around it? Semiconductors, for example, how can we actually build local equipment suppliers and invest in those? And therefore, then look at the so-called knowledge institutions and make sure they have the workforce to feed the local companies who will then feed the larger multinationals. So again, we're studying a bit more and looking at the whole ecosystem to make sure that it's more entrenched, rather than just a quick fix and bringing people. Now, the other thing, of course, we do have to balance between what we can produce as a nation and what we need today, because we're not going to build talent overnight, and therefore we need to have people to come in. I think Naveed yesterday spoke about it, where we do need to look at our immigration policies and track the talent as well. But we need to make sure of both. Yeah.
Anyone else want to answer any of the questions?
Yeah, so maybe I'll answer it from a slightly different angle. So looking at it from an EPF lens, one of the problems that we can see as the country ages, and we are aging very, very quickly. Our birth rate is at 1.6 per family today, and that's below replacement rate. So we are going to hit at some point a declining population. It's still about a generation away, about 20, 25 years away, but it is a problem that we are inevitably going to face as a country. So planning for an aging society, planning for retirement is really important. Why do I bring this up? It is because when we look at EPF, the data of EPF members, and we have a measure called adequacy, and in the pension one, adequacy is about the percentage of people that have sufficient amounts to retire with. It is only a third of our members today, right? Only 1 out of 3 Malaysians are prepared to meet minimum basic savings. And to compound that, minimum basic savings as defined today, it will change over time, is only 240,000 ringgit. And that translates into a retirement income stream of 1,000 ringgit a month. That is how it's defined today. We're looking at redefining that, at raising the bar, but even at what I would say a low bar today, only 1/3 of Malaysians are prepared for retirement. So it is an acute problem that we are facing. And it's an incredibly complex problem, and a root cause of this problem is that wage structures in Malaysia are too low, right? And that is shown in the GDP and the national account numbers, where only 32% of GDP goes to labor today. In advanced economies, it's more like 45%. And therefore, I feel that from an economic policy standpoint, the biggest focus that we can have is about wages and the structure of labor in Malaysia. That is the most important thing for us to tackle for this current and upcoming generation. And I don't think we talk about this enough. We talk about equity ownership, we talk about high-value industries, but at the core of it is about high-value jobs for Malaysians. And how do we create high-value jobs for Malaysians? And that will have huge positive impact if we focus on that today, right? So, and it's an incredibly complex subject, and I don't pretend to be an expert on it, but I can articulate the problem statement, and we see that very acutely from how our EPF members are prepared for retirement.
Actually, on that point, Zul, and I know this is something that the Deputy Minister talks about a lot as well, that when it comes to Malaysia, if you look at the cost of living issues that we talk about, ultimately we care about purchasing power, not so much cost of living. And I think the more we talk about what you just said, the realization that Malaysia doesn't really have a cost of living problem, it has a wages problem that affects the purchasing power. Actually, the more we can actually start to restructure these things.
Correct. So, and it's an incredibly complex problem, right? So all of us travel all over the world, and you can intuitively understand that the cost of things in Malaysia is actually not very high. But despite that, we have a problem of this cost of living issue. So it is, I completely agree with you, it's actually a wage issue. When you look at the data of low-level wages, white-collar wages, not blue-collar wages, over the past 20, 25 years, it actually has grown at a compounded rate that is lower than inflation. So there is a structural problem happening in the economy resulting in these low wages, right? One hypothesis is that as wage pressures go up, what happens in Malaysia is big businesses then run to the government and say, allow me to have cheap labor from outside of Malaysia. So every time wage pressures goes up, we bring cheap labor in. And the problem with that is therefore you're not allowing for real price signals to businesses. And businesses are very adaptable, right? If you allow for the right price signals to businesses, they will substitute labor for capital. They will automate. They will use more machinery. They will use more software. But you have to allow those price pressures to demonstrate, to realize itself in the economy for businesses to adapt to this.
Thanks. Maybe, further comment.
Yeah, I think the only point I add, I fully agree with what's been said. I think this is where YB, as Malaysia develop execute our industrial policy, I think it's really important to build in effectively that component of increasing the wage, as well as basically all the other so-called spin-off benefits. So even as we look at investment, I think we need to actually think, are we investing, putting money into this new direct domestic investment in areas that really, would promote increased productivity and actually will generate effectively what I call a higher wage. And I think we do that, then I think slowly, I think we'll basically be able to actually to generate an environment whereby we value investment, or we focus on all our subsidies, all our incentives, all our investment to areas that generate these particular, what I call benefits. One example, as I say, we have a lot of FDI, etc., and how government actually structure its industrial incentive. I heard that a lot of the investment, most of them probably doesn't require maybe equity, but it may require debt. But if you look at it, a lot of it are being funded effectively by banks outside Malaysia. So I think we need to actually figure out how to actually to do so and probably promote what I call greater spin-off benefits to our country while generating what I call that higher wages.
Thanks. Dato, maybe you also...
I want to answer the second question.
I was going to ask,
Since no one's answering that question, so maybe I'll attempt to answer that question. Perhaps right now, there is a limited opportunity for you to approach. There are, I think, 20 PE managers locally in Malaysia, and for VC, maybe about 100. So I think in the future, what we've done is actually trying to bring these global VCs and GPs in the PE space as well, PE, infra, and real estate, to come and set up shop in Malaysia. Once Dana Pemachu is approved and the execution starting next year, you will see more opportunities then. And I think these PE managers or the GPs will start to do the investments, and I think the family offices, the corporates can approach these GPs and give your intention to participate in their perhaps next round of fundraising. I think that's the best that you can do for right now. As far as the kind of back to the real economy. I think for us, when we approach this is kind of related to what YB mentioned, the question that YB asked just now. For Co-op, when we look at the demands of our pensioners, so we ask, whenever we do our Jelajah My Pesara all over the country, we do the survey. And it's quite consistent that I think a lot of them looking at, for example, entrepreneurship. So we want to assist them. But of course, from their perspective, it will be more microfinancing. Over and above that also, and as far as the aging society is concerned, I think their needs as far as, for example, a dignified retirement home, not institutionalized retirement home, but dignified retirement home, independent living. I think that's what we need to build in order for us to meet the needs that they're looking at. That is affordable for them, not the high end. I think there are quite a number of retirement homes out there that are that meet the needs of the maybe T20, but not necessarily the M40 and the B40. So we're looking at those space. So we're working with, for example, some of the Majlis Agama, the Ma'ins, Majlis Agama Islam Negeri, as well as the Yayasan Wakaf Malaysia, to see how we can develop, for example, Wakaf lands for that purpose. Thank you.
Thank you. I just want to pick up on that point because I'm just going to assume somebody is going to ask this question, so I'll just ask it. Because you mentioned about trying to bring in these international VCs and PEs and so on, and this is a question that's open to all, because we know how the Malaysian market looks like. We know that the returns not great, and we know that 97% of the Malaysian firms are SMEs, and the vast majority of them are micro companies. And even if ASEAN is a great growth story, it's not necessarily a great investment story, because how's your exit, what are you actually getting in return, and so on. So why are these companies not in Malaysia yet? Because I assume everybody wants to make money. So maybe you can give a view of actually what are the challenges you face when doing these investments here from the perspective of returns. I assume Hisham was going to ask this question. So
Yeah, this is my and Dato Hisham's favorite topic in terms of this. And as we think about it, I think we got to take stock of our current situation. The current situation is, and you can actually analyze it in great detail, is that what is the actual return on Malaysian investment? And you can break it into two parts, right? Public equity returns and private equity returns. Public equity returns, we all know, last 7 years or 10 years, share price return is virtually zero. Aside from basically the most recent spike up. So if you look at it, our Malaysian public equity returns over the last 10-year period effectively is like down to 2 to 3%. Effectively, we had a lost decade. Private equity return, the data is not so much available. Probably familiar with, and we can take, as mentioned just now, there are X number of private equity firms that basically has been operating in Malaysia. If you look at their funds that they are generating, my sense is effectively IRR is probably less than 5%. Okay, if you take VC returns in domestic equity, as I was told, I'm not sure, I didn't validate the data, I understand that the VC returns effectively in Malaysia is zero. Okay, so these are the three basically current situation facing us. So as we move towards effectively moving domestic direct investment, I think it's really critical for us to actually to understand what are the reasons behind this and what are we going to do differently in order for us to generate effectively better returns. Because we can talk about increasing effectively investment, but the crux of the issue and the bottom line of the issue is really about how do you deliver satisfactory returns for the investment that you actually do. Now, we don't have a solution out of it. I think the job is all of us, basically, whether we are corporate leaders, private equity guys, corporate guys, to actually to generate, how do we figure out to generate for the next 7 years, for the next 10 years, better basically performance compared to what we've been generating over the last seven years.
I think bringing the global experts is one of the solutions, right? For them to assist them to grow from, I think from the seed, I think there's quite ample supply of funding for the seeds. And then there's ample funding for the already stable, mature kind of businesses. What's missing is in the middle. So we're trying to resolve that by bringing in the experts, to come in and look at it and provide assistance. When we talk about assistance, we're not just talking about capital perspective. There is ample capital, 1.8 trillion sitting right here, right? And 2.3 trillion if you include the other side, the private market side as well. So that's not the issue. The issue is the expertise. The issue is network. The issue is giving opportunities of possibilities that are out there. The issue is nurturing the local talents, nurturing the entrepreneurs. I think those are the things that we need to address, and also to provide that whatever gaps within the ecosystem, that's what we're trying to do.
We need better potato farmers, basically. Yeah. Zul, 2 to 3%, 5%, 0%, my retirement savings do not like those numbers. So.
I do want to show you we're perfectly aligned because my retirement savings are there, is in the EPF as well. So, I mean, Dato Rahman brings up a very good point, right? When you look at historical data, the numbers are not compelling. So when we look at this, it is also about making sure that we're picking and choosing certain verticals and sectors that we are very comfortable that the natural return on capital is of a certain level. So healthcare is a very good example, right? I don't think we want to spread our bets too widely. It is about a filtering system that gets into a few sectors that we are comfortable with, that has long-term, sort of decades-long tailwinds. Healthcare is one of them. Infrastructure is one of them. And within infrastructure are things surrounding energy transitions, etc. So I think industries that we invest in have to have a natural high return on capital already, right? We're not, EPF is not in the business of making bets where there's huge cash burns ongoing all the time with the idea that this is going to be this hockey stick at year 8, year 9, year 10. I think our investment, I mean, all investment funds starts with an investment belief, right? And our investment belief is that we want to invest in businesses and industries that have a naturally high return on capital already. And then with that, we then choose how much to pay for these assets. I think the good thing about the EPF is also that we can play throughout the capital stack as well, right? So we're equity investors, we're debt investors, we can be hybrid investors somewhere in the middle already. And that's a natural place for us to be in, because that is, that when you play at that level, you're actually providing a solution to someone in terms of completing his or her capital stack, right? I think that the other thing that we look at is we naturally gravitate to much larger transactions as well, for two reasons. It doesn't make sense for the EPF to do small transactions given our fund size, because we just then will end up with a huge long list of investments that become unwieldy for us to manage. We don't want 10,000 investments in the portfolio. We cannot manage that. So we naturally gravitate to larger ticket sizes. And larger ticket sizes are in a way easier because they have track record, they have governance surrounding them, and they're assets that are easier to understand as well. Buying a collection of power plants, for example, or solar farms is much easier than trying to invest in a startup, right? So we do take in a way the easy way out, but it dovetails with what we need to do as an investment fund.
Thanks. We're out of time, but because Tuan Rumah is here, so we have to let him have the final word. So, Feisal, I think the question, actually, what Dato Ni mentioned also on working with others on expertise in trying to deliver domestic investments here. Maybe if you can just share your views as well.
Okay, thanks. Actually, when you take stock of the country over the past few decades, I would say that we've been relatively complacent. And why I say that is because when you look at wages is low, energy is subsidized, and I think most of our companies, even us, for that matter, of stakeholders, are demanding dividends, right? And therefore, it's quite easy to operate status quo and just give your returns. And in that kind of environment, as a country where everything is kind of like subsidized, where is that inertia wanting to do more and wanting to make, a lot of money, so to speak? Now, things are changing. The landscape is changing. We know that whatever it is when it comes to cheap energy, that's not sustainable. We see geopolitics coming in, people are investing. There's a whole host of changes that are happening right now. So what we're facing today is we can't afford to be complacent. And this is part of why we're having this forum. Look at potatoes, etc., and look at how we can look at the probable to the possible. And why I say that is because we do need to get our companies, startups, to not think about how they can be successful in Malaysia. They have to start thinking how they can compete globally from day one. And I think this is something where, we had last year's KMF, we had Magnus in Antler, so we brought them in and we supported their programs. But again, when they're looking at their cohorts and getting ideas in order to feed, a lot of the people are looking at something and they're not thinking big enough. And what is the size of the market? And VCs, for example, when you look at the portfolio that they have, 90% of the investments will probably fail. So they do need the outliers, and the outliers have to pay for the investment. So you do need to have a market size large enough to pay for that. So that it's the thinking. It's not a case of the raw talent. We have amazing raw talent. It's not a case of money. We just spoke about it. I think we've got a lot of them. I think in terms of resources, in terms of what the country can be as a champion globally, we have those. But I think it requires, we're just not used to it. And I think this is where we do have to slowly build the ecosystem and perhaps, where we can come in and we can de-risk some of it by coming in to co-invest in some of the early stage investors. But over time, I do think that we have a lot of potential. So that's what I think.
Okay, and with that, thank you very much for your time. Thank you to our panelists. Enjoy the potatoes at lunch.
Thank you, Nick and panelists. Would you please step to the front so we can commemorate the session with a photograph?